Well, the Bank of Canada's next rate decision is still a month away, but some traders are already bracing for something that hasn't happened since the early days of the pandemic, an interest rate cut. The U.S. Federal Reserve will make its next rate decision in about a week, and markets are already dialing back expectations there, too. Let's bring in Benjamin Tal, Deputy Chief Economist at CIBC. Benny, I wonder, what are you thinking when it comes to what the Bank of Canada, starting with the Bank of Canada, can do in this sort of environment where, yes, there have been some vulnerabilities shown in the banking system, not in this country, but still.
Yes. What a weekend.
It was so true,
a crazy weekend, of course. And the Bank of Canada is trying to figure out where to go. First of all, I don't think that the Fed now knows what they're going to do, and their meeting is in a few days. They're still trying to figure out how big the problem is in the banking sector. I don't think it's a huge issue. It's not an issue of risk that we have seen in 2008 or in the S&L crisis. It's a liquidity story in the high-tech sector mostly. So it's not a big story at this point. However, there are 2,340 banks in the US or something like that. So there will be more names in the future, in the near future. So that will keep the market guessing, and therefore the Fed guessing, and of course the Bank of Canada guessing. Now, the call for the Bank of Canada to cut by July, I think, is a bit crazy, quite frankly. I think that the Bank of Canada is right to stop raising interest rates, but cutting at this point will be premature, especially given the fact that this is not our crisis. This is not a Canadian story by any stretch of the imagination. We are basically second-hand smokers now. So this is not an issue that should impact the Bank of Canada anytime soon. And I believe that over the next few weeks, as the fog clears a little bit, this kind of pricing will change.
What do you think it would take for the Fed to cut? What sort of a fallout from all of this do you think could actually lead to that sort of scenario?
Yes, then the issue should be much more significant and difficult in order for the Fed to cut. Remember, just 2 days ago, we were talking about the Fed moving by 50 basis points this month. Now they're talking about cutting. For this, you need to see a significant pressure and pain in the financial system. It's not happening yet. The situation is not so big to justify this kind of a move. However, people were talking about 50 basis points. Now they're talking about 25 basis points. There is another factor here. Remember, we just talked about 50 basis points, 25 basis points. If the Fed says we are not raising interest rates despite inflation, that will be a sign of panicking a little bit, yeah? It means that the situation is worse than you think. And the Fed is not cutting despite inflation rising. So what to do? This can cause more damage than good. And therefore, I think that the Fed will be thinking very, very hard before deciding not to raise interest rates or even cut, just because of the impact on the psyche of the market.
So what do you think the Fed does next then? I mean, we still have CPI data to get through before we get to the Fed's decision.
Bingo, that's a big number. Tomorrow I will be focused on the Bloomberg machine looking at that number because clearly if you get stronger than expected inflation numbers, the Fed will have to make a decision, and I think that they will raise but at least 25 basis points. If you get consensus or below consensus, then maybe they will not cut. So it's really a very, very important number. It should be very interesting tomorrow. So I think that we have to focus on that and see what the Fed will do. I don't think that the Fed knows what they will do tomorrow, quite frankly.
What do you think we should interpret from, any sort of market reaction that we see tomorrow to the inflation data? Because I was trying to, even just wrap my head around the possibilities. There's a lot of them in terms of which way things could go as a reaction to the CPI data.
Yes, the market is confused now. If we are going to get a stronger than expected inflation, then you will see the likelihood of the Fed cutting be reduced. But if for some reason we get good numbers from the inflation front, you will see the market pricing in the Fed cutting tomorrow. And that's something that, when I say tomorrow, I mean in the near term. And that's something that is going to confuse many traders. So that's why tomorrow's number is extremely important. The market is in the state of mind that the Fed should stop raising and actually start cutting. Clearly stop quantitative tightening, which will happen, I think, very, very soon, because that's the first step towards stabilizing the situation. So tomorrow is going to be very, very interesting. But I think that the likelihood of the Fed still raising by 25 basis points is relatively high.
Okay.